Hello, and welcome to Homeowner AF, the Canadian first-time homebuying podcast. I'm Brianna Goslin, mortgage agent level 2, and I work with Canadian first-time homebuyers every single day. If you want to own real estate in Canada but aren't sure how to position yourself to get there, this is the podcast for you. I want to see more young Canadians in the market, building equity and long-term wealth. That starts with getting the right advice at the right time, so you're positioned to act when it matters. Each week, I'll bring you bite-sized episodes that actually move the needle toward homeownership. Short, strategic, and packed with practical tips that you can use right away. I'll cover topics like minimum down payment, closing costs, credit, co-signers, and more. Remember, your finances are like a thumbprint. No two are the same. For advice tailored specifically to you, book your free call at briecallme.com. Now, let's get into it. Hello, welcome to Homeowner AF, and today I will be talking to you about fixed rates and variable rates and which one may be appropriate for you as you choose your first mortgage product when you make your first home purchase here in Canada. First of all, when we're talking about fixed versus variable rates, it's important to understand how those rates are determined by the bank or the lender that you're borrowing your mortgage from. So first of all, we'll talk about fixed rates. Fixed rates are governed by the bond yield market. So the bond yields will go up and down, and you can watch them online, although you may need to be an economist to make sense of what's going on. All you need to know is that as they fluctuate, the fixed rates that are offered by lenders will fluctuate. But once you lock into that payment and you've obtained your fixed rate mortgage, your payment will continue to be the same throughout that 3-year or 5-year term, regardless of what's happening in the mortgage market. So that's really the beauty of the fixed rate, is that you are always going to have that payment for the duration of your mortgage term. Now, when we're talking about variable rate, these fluctuate more throughout the life of your mortgage because it's actually a variable. It's not going to stay the same. Now, how are they determined? The variable rate is determined by the Bank of Canada announcements that we hear about in the news. And likely, if you're in a workplace, you probably also hear about this around the water cooler. Everywhere, really. It's quite topical because it is directly linked to the Canadian economy and its strength. So, your variable rate will fluctuate as prime rate fluctuates. And when I'm talking about prime rate, right now it's June 23rd and prime rate is sitting at 4.45. Not to be confused with the overnight lending rate, which is actually what the Bank of Canada will be announcing, is what the overnight lending rate is. That's currently sitting at 2.25. So that's a little bit lower than what's being offered at the banks because they still need to make money on that money. So you're going to be offered something closer to prime rate, 4.45, with a discount likely off of prime rate. So right now, we're looking at rates around 3.8, 3.9 for the best variable rate mortgage, whereas the fixed rates are around 4.1 for the very lowest insured fixed rate mortgage right now. So there is a bit of a spread between the two, and we'll get into that a little bit more. So now that we know how those rates are determined by lenders, let's talk about what it actually means for you after you've closed on your first home. What is that going to feel like? And I say feel like, not just cost, because when we're talking about fixed versus variable rates, it does have quite an emotional impact on the borrower. And I say this because I was a borrower in 2022, a new business owner with fluctuating income, and I also had that fluctuating mortgage payment as part of a variable rate mortgage. Now, we had done the math. We knew we could absorb an interest rate hike, but we also saw that variable rate go up 10 consecutive times, which was unprecedented for the Canadian economy. We had never seen that before. And now we know not to bet on things that are unprecedented because anything could happen really in the type of economy we're experiencing right now in Canada. That said, if risk is not something that you're ready to take on and it's not something that your budget will allow or the cash flow in your home will allow, then you're going to want to sign on to a fixed rate mortgage. Now, what this means is, for example, if you've signed on the dotted line and you have a 5-year term, then you will be paying, say you have a $2,500 mortgage payment. That mortgage payment will stay the same throughout that 5-year term until maturity, unless, of course, you break that mortgage and enter into a new mortgage. Now, if we are to sign on for a variable rate mortgage, one of two things will happen if that variable rate moves. Now, if the variable rate moves down and you have a true variable rate mortgage, also called an adjustable rate mortgage, then your payment can fluctuate with those Bank of Canada announcements. So if the rate goes down, your payment will go down and you will be paying the same amount to principal and interest. Whereas if the rate goes up, your payment will then go up so that you can recalibrate to be still paying that amount of principal and interest. Now, if you have a variable rate mortgage that has a static payment, and this is often what is offered by the big five banks, then actually you will still be paying the same payment for the duration of your term. And you have to be wary that if the interest rates go up, you will still only be paying the same payment. So effectively, something has to move in your loan. What happens oftentimes is that amortization then starts lengthening, and at renewal, you have the opportunity to address that amortization or to keep going with the longer amortization. And if you are already a homeowner and you're listening to this and this has happened to you, you can get a hold of me, and there are some things that we can do to remedy that if you want to get back on track. But so even if you have a static payment, you want to be cognizant of what the interest rate is doing, because that could affect your loan long term. Now, who actually chooses a variable rate mortgage? One of the best parts of a variable rate mortgage is that it's much more flexible than that fixed rate mortgage. And what I mean by flexible is that the cost to break your mortgage is likely going to be much less if you decide to break the mortgage midterm. Breaking the mortgage means paying out that mortgage in full. So if you need access to equity by way of refinance, then you can do that midterm by breaking your mortgage. Also, if you are going to sell your home before that 5-year or 3-year mark or 2-year, depending on what you've signed on for your mortgage, if you sell your home before that maturity date, then you will also be fined a certain amount of money. Now, depending on which type of mortgage you've chosen, that amount of money will differ. That fee will change. So if you've signed on for a variable rate mortgage, you will be charged 3 months of interest to break the mortgage. And that is typical throughout the life of your loan. If you have signed on to a fixed rate mortgage, then we will proceed in one of two ways. Well, the lender will decide how you proceed. You will pay the higher of either the 3-month interest rate penalty or the lender's interest rate differential calculation. Now, that calculation has to do with the current rates, so posted rates, any discount that you got off of the posted rate, and how much time is left on your mortgage. Every lender has a different calculation, but we can either get a hold of the lender and do the calculation, or you can get a hold of me and I can do the calculation for you so you can decide if it makes sense to break that mortgage. All that being said, a variable rate mortgage is going to be a better choice for somebody who values that flexibility, who knows that they may need access to that equity, they may be moving, or things are in flux in their life and they want to have that option to be able to pay out the mortgage or to change the terms of the mortgage throughout the term or before their maturity date. If you are a first-time homebuyer with very little equity in your property, say you're putting down just the minimum 5%, actually accessing that equity will not be an option until you have garnered 80 or 20% equity in your property, which means you probably have to pay down that mortgage a little bit and wait for the market to do its thing for property prices to increase or property values to increase. In that case, if you can get a great fixed rate that you're comfortable with paying through the term of your mortgage, then that's going to be a great option for you, especially if you're not planning on moving. If you're staying in your home for the next 5 to 10 years, then a fixed rate may be a great option for you. Now, if you want to make changes, if you've already made your decision and you want to go from a fixed to a variable or a variable to a fixed, is that an option midterm? I get this often. I get this question very often, not only with first-time home buyers, but with people who are making their second, third purchase as well. So if you're thinking it, it's okay. It's pretty common. Now, there is one that is possible. So if you are on a variable rate mortgage, you signed on to a 5-year term and you're listening to the news and you're getting uncomfortable about what's going on, you think some rate hikes might be coming and you want to lock in. Completely doable. And there's some things that you need to be aware of. So first of all, you're going to be at the whim of what your lender is offering to lock in. So they will be offering you either a posted rate or a discount off of posted rate, but you are kind of at the mercy at that time to lock in if that's what you want to do. The second thing that you need to be cognizant of is that mortgage will now be a new term. So for example, you have a 5-year term, you're a couple months in, you see that the markets are shifting, you want to lock in. Well, now you will be locked in to a 5-year, 3-year, 2-year, 1-year, whatever you choose, but it will start on the date that you've locked in. So it will be a new mortgage term. And if you need to break midterm, you will incur that fee that is associated with fixed rate mortgage. So that's something that you need to keep in mind. Can I go the other way? Well, you can change from a fixed rate mortgage to a variable rate mortgage, but that will mean that you are breaking your mortgage. So you will incur the penalty, the interest rate differential penalty, or the 3 months interest if you're close to maturity, but likely it will be the interest rate differential. So you will have to pay to get into that variable rate mortgage. So I would ask why you want to get into that variable rate mortgage, and do the changes make sense? Do the savings make sense for you to make that move? Does it make sense long term? Something to keep in mind. So variable rate mortgage, fixed rate mortgage, they both act a little bit differently. They'll both get you into a home. One may garner a bit more savings depending on what time it is in the world and what's going on economically. Right now, a variable rate will give you some savings and it will carry more risk. So this is a very individual question that you need to talk about with your mortgage broker and also anybody who is going to be affected by this purchase. So any co-signers, any guarantors, and of course, anybody that you're purchasing with, if you're purchasing in a couple or a partnership. I'm happy to sit down with all parties and virtually walk through what this is going to look like for your scenario and try to help you assess what your risk tolerance is for this type of loan, whether you want a variable or a fixed interest rate. If you want to talk it through with me, go ahead and book your free call at www.recallme.com, and I look forward to helping you out. Chat soon. Thanks for listening to Homeowner AF, the Canadian first-time home buying podcast. You'll find links to everything I mentioned in today's episode in the show notes, along with details on how to connect with me. I welcome all of your first-time home buying questions. Send me a voice note to have your question featured on air. And if you're ready to talk through specifics for your first home purchase, you can book a free call at recallme.com. Remember, if home ownership is your goal, you could be closer than you think. You just need the right information to make the right move. I'll be back next week with another tidbit to help you get there.